Ever since the market disconnected with reality in 2009, we have witnessed unrealistic and impressive gains within particular US equities. Many people have been attempting to buy into the index and track the performance of the stock market. They lose. Why? Because the market itself isn't doing well. There are particular stocks which have been receiving fake printed currency, and it is those stocks which you need to invest in order to profit. You came here for the truth, so let me unveil that for you. Today we're going to talk about investing like a pro, and I'm not talking about the hedge funds. As we look at this here, US household performance versus hedge funds since 2003, and you can see that the average US investor index here has outperformed hedge funds, and that has resulted in very big problems. As you can see, the US investor index versus the hedge funds, definitely a performance difference here. And why? The hedge funds are there to get you that performance, to take extra risk, to bring you extra gains. But as I've covered recently, over 1,000 hedge funds have shut down last year, the most in any year since the financial crisis. There has been a disconnection between reality and everything that we have seen within the not just US equities, but those in particular. And I would suggest to everyone that it is the central banks which have provided their printed currency, and that has allowed certain stocks to rise. But how do we get the investment tips, investment advice? Well, everyone wants to know, how do we do it? What's happening? Do we just invest in the stock market? That's not good enough. I am not a fan of paper assets myself at this time, but many people want to know what to do. So here it is. If you want to know what to do, this is the strategy. This is the SEC's website, and you're looking at a 13F. Okay, so all of the different corporations, all of the institutions in this case, like the Swiss National Bank, have this public information that is talking about all of their purchases, what they own. Okay, so if we track the, for example, in this case, the S&B, you'll see this. This is a different website that sort of lines it out all nice and clearly for us. You can see on the right-hand side the 13F Holdings summary. These are the stocks which the Swiss National Bank prints up currency and buys. This is their top holdings: Apple, Microsoft, and Amazon and others. Okay, so these big companies, we're talking about billions of dollars worth. You can track their performance. You can see how much, for example, top buys. You can see what they're buying right now, when they're selling. You can do all that. It isn't important to track their 200-day moving averages, 50-day moving averages, unless you're a type of day trader who likes to bet within that. But if you're more of a longer term type investor, you want to keep it in there for, let's say, a few months, a few years perhaps, and you want to be able to get those gains that you've been seeing in the stock market, well, don't be fooled by what you've seen within the technical analysis, because those are short term and you may not be willing to do that. You may have a 9-to-5 job and you can't exactly trade 12 times within a particular day. Let's look at the central banks and realize that they've dropped interest rates down to the bottom. Yes, they've increased to some degree, but historically this is extremely low. And the quantitative easing that's been going on is a global phenomenon. So you can see that central banks are still printing up money, and they are still engaging in trying to increase their portfolios. And they do so by buying US equities, being one of those type of investments. So look at this. This is the 13F. There are others, I'll show you in a moment. And basically, let's track the performance of the central banks, and they will be the ones to tell us if this is a good company to buy. Not because it's fundamentals, not because it has a future, it has a potential. No, simply because fake printed money is being printed up, pushed out there onto the market, and buying equities directly. But let's get more into this here. Other things to look at. This right here is called Holdings Channel, and this will give you an idea of what people are buying right now, or corporations are buying. It isn't really important to see what your friend down the street is buying or what Jim Cramer's buying. We need to look at the big money. That's central banks and that's major corporations, which in the case of Berkshire Hathaway and Goldman Sachs and others, we can see that they're buying up. For example, I just use Apple as the example. You can see that they're buying this up to the tune of billions and billions of dollars worth. Their performance means a lot. Your barber just bought, $2,000 worth of Apple. That doesn't really make a difference, although it tells you something about what's happening. Berkshire Hathaway, one of the companies that benefited from the financial crisis afterwards. Berkshire, for instance, is the largest shareholder in Wells Fargo, who got $25 billion, 91% of the TARP funds invested in institutions headquartered in California. They received big money because of that, because of the failure. They got that bailout, and indirectly, Berkshire Hathaway, Warren Buffett, was able to benefit from that. Okay, that's important to note, because you and I don't get those bailouts. We need to understand the companies that are getting those bailouts, either directly or indirectly. They're the ones that will benefit. They're the ones that are, in my opinion, the riskiest. But let's just go back to this for a moment. Holdings channel, you can type in any of these different stocks. You can see a lot of which are the stocks that are being bought, which are being sold, and these are all based on the public information there. You don't need to guess. You don't need to talk to some special advisor. You can see these for yourself. So do that. Don't trust anybody else. Just do it for yourself. Don't look at the technical 200-day moving averages and all that stuff, because the average individual shouldn't be looking at that. I mean, we're talking about trading many times within a day, and I assure you, the algorithms, the computer programs are a lot faster and a lot smarter than you are. So don't try to do that. If you think that Apple is the way to go, then look, if the big companies and the central banks are printing on money to buy it, maybe you should buy it. That's the way I look at it anyway. If you're willing to take the risk on paper assets, you're willing to invest in these immoral corporations, please do so using this strategy. Country, sector, and rating classification of the CSPP holdings. What are we talking about here is the ECB's program to buy garbage debt from companies. They do so essentially propping these companies up. They can create a lot of debt. They can have really bad corporations that are just giving off their money, burning through the cash, taking on all this debt, and it doesn't matter because the ECB will buy it up. They're not allowed to do so, but they just did it anyway because, of course, the market would collapse. So this has been a problem ever since, let's say, 2011-12 area, and then it has accelerated in recent years. But as long as you buy the garbage debt, nothing will be ever wrong. So let's look at this. Look at the corporations that they have been buying into. So what you can do is you can do a little search online, type in CSPP holdings. I've covered it here. I believe it was UBS, and I showed it here in a previous video, UBS, who outlined every single one of the holdings from this CSPP. You can see that it is public, and you can note which companies have been receiving the most amount of money from the ECB, who's buying, who has the most debt that's being purchased by the ECB, and that is a good indicator of a company that's basically getting bailed out consistently. Should they pull back on the CSPP, then it's time maybe I don't want to keep my money there anymore. Maybe they're willing to, let the market fall a bit. That's another strategy. Let's look at the bailouts that are happening, and we will define who will rise, or at least who maybe will be allowed to stay alive. And last but not least, the strategy here is that everything is awesome. You never have to worry about the dismal performance of the stock markets because the Federal Reserve will be the lender of last resort. They will print the currency into worthless confetti, and you can best be sure that this will result in the everything is awesome strategy, that no matter how bad things are, you'll always have the Fed. If you found this video informative, please give me a thumbs up. If you like my sarcasm, please give me a thumbs up as well. And if you don't like the video, if you hate my face, if you think I'm stupid, give me a thumbs down. I love those too. And if you're interested in more information, I know you'll love my books. My books talk about two different subjects here. When the Money GPS, basically about the 4 asset classes and how to profit from them. Whereas, by the way, there's information about stocks in there. My new book talks about familiar concepts, but I get into things like self-sufficiency, reducing your monthly expenses, and trying to do away with the monetary system as a whole. So that's, if you're interested, the links are in the description below. Take care.